rates because the Bank of England has left its interest rates the same in a rather surprise move. It had been expected to raise the rate to try to curb inflation, but figures showed an unexpected fall in inflation yesterday.
Well, it means a slight sigh of relief for people with mortgages, but that may not mean the rate rises are over. The decision was made by the narrowest of margins, 5 votes to 4. Well, Sally Mitchell is from The Mortgage Mum and joins us now. Sally, what is your reaction to this decision to keep interest rates as they are for now?
Well, I welcome it because I think what everybody needs is a little bit of a break, a little bit of respite from, the 14 successive rate hikes we've had in a row. So I think it's great. Hopefully it shows that, the policy of using the interest rates to manipulate inflation is working. And I'm just pleased that they've decided, even by 5 to 4, that they can afford to take their foot off the gas and let's just see how it goes for the next month or so. And it gives people a glimmer of hope that things can change.
Why do you think they've taken this decision then, Sally?
Because they have realised that inflation went down. By 0.1%. But that's the only reason I can see. And the powers that be were really predicting a rate increase today had the inflation rate gone the way they expected, which was to go up. It's bizarre that they're saying inflation was down because airfares and hotel rooms came down in price because, as far as I can see at the pumps, the petrol and diesel is going up. But it just shows how intertwined those two indices are and how they affect each other. And of course, we have to be quite careful with the interest rates, base rate, because over-eggs the pudding and you do run the risk of going into recession, which nobody wants.
So who's going to benefit the most from this then?
Well, see, everyone a bit of benefit. Anyone who's on a standard variable rate or tracker rate mortgage, just talking about mortgages, won't see their payments go up this month. Normally with a tracker, whatever the base rate goes to, that's what you pay that month. So that will be a sigh of relief for people on those products. 80% of mortgages in this country are on a fixed rate. And certainly the announcement today has given confidence in the marketplace. And I've had at least 2 lenders come through this afternoon saying that they're going to drop their fixed rates by up to 0.3%. So people on a fixed rate should benefit as well. It's a glimmer of hope, as I say, where everything is really quite grim and has been grim for a long time. It shows that things can change and we don't have to keep on this upward escalation all the time.
It has been quite a journey because 2009 or something like that, they started cutting the base rate and, it was literally just above zero. So, yeah. That many people have been on a huge journey, particularly people on mortgages. Just explain, the impact that is having on people and, their finances.
Well, it can mean hundreds of pounds in increased payments per week, per month, I should say. And we've only just started to touch the tip of the iceberg. We have 2 million people coming to the end of their fixed rates between now and the end of 2024. And those people have been enjoying, if that's the right word, historically low rates. They're probably on a 1, a 2, or something beginning with a 3 at most. And they're suddenly going to be looking at rates with a 5 in front of them. Now, that makes a big difference. I've seen clients have their mortgages increase from between £60 a month up to thousands. It's obviously scaled up depending on how much you have on your mortgage, but it makes a huge difference when everything else is so much more expensive too.
Now, of course, they're staying the same for now, but people shouldn't get too excited and think that means they're going to start dropping off again. Doesn't mean that is the case, does it?
No, I wouldn't like to predict what's going to happen. I wish I had that crystal ball. Experts say, we're not out of the woods yet. We should expect to see further increases heading out towards the end of this year. Maybe we're close to topping out. Maybe it'll go to 5.75. Maybe just stay at 5.5. But no, we're not out of the woods yet. The target for inflation is 2%. We are at 6.7%. So we've got a long way to go, unfortunately.
And finally, Sally, what's the advice for people like me whose fixed rate mortgages comes to an end when mine's in December? So what should we be doing then?
Right. This is something I don't think you can do on your own. You do need a broker who can compare the whole market for you. And things are changing so quickly. We're getting lenders changing rates. It feels like every couple of weeks. And we have had the same lender change rates a couple of times in a couple of weeks. So use a broker, a good broker, get a recommendation from a friend or colleague, and also look ahead. If you're coming to the end of your fixed rate, you really want to be looking at your options 6 months ahead, which I don't know if you have, but maybe you need to call me after the show, because then we can, sorry, I'm cutting you off. Then we can look at the best option now, lock in that rate. So knowing that if things get worse, if things go up again, you've got the best rate at the time locked in. And if things get better, then we can change that rate to a cheaper product as time goes on. We're finding we're rewriting mortgages for different rates, 2 or 3 times within that period, whereas in the old days, things didn't change. You picked a rate and it stuck for months. But we're doing a lot of rewriting at the moment to get advice.
Okay, thank you very much, Sally Mitchell from The Mortgage Mum, even if you have made Adam Powell look a little bit more worried than before the start of this conversation.